Is now the time to buy these financial markets? Let's find out. Okay, so hello and welcome to our latest urgent market update video. This is going out on Monday, the 28th of April, 2025. And we're really going to ask ourselves, you're probably very familiar with the price action over the course of last week. It was broadly quite bullish. Not only did we see prices grind higher, we also saw a significant gap to the upside as well over the course of last week's trading. There's a number of reasons for that, but we really want to drill down and determine whether we can actually shift our bias, really, which has been really quite bearish, rightly so, since February time, just prior to the whole reciprocal tariff debate. So let's get in. We'll discuss it as best we can, and we're going to fundamentally answer this question. And in the process of doing so, we have some really high probability trades setting up, and that's the point that we want to get across. So let's begin then with our risk warning. Take a brief moment to familiarize yourself with our risk warning currently up on screen. And as always, just be mindful of the risks involved in trading these financial markets. We are trading incredibly volatile markets currently, so do bear that in mind with your approach to risk. It is an important feature to understand and know the market conditions in which you're operating. Okay, so let's get straight into it then. And I suppose what we want to do is to take a little step backwards first, and we'll have a look at something like the S&P 500. So what we're looking at here on the top left-hand side is when Donald Trump was inaugurated on the 20th of January, and we saw prices just sort of rally a little bit more. Bit of a sideways moving pattern for a few weeks, and before it looked as if we were going to make moves to the upside. And within a few weeks of Trump being in power, this whole sort of tariff narrative started to come into play. And if you look at some of the dates, there's some specific sort of very important, and from a price action perspective, there was some important price action underway. And we can see that the dates of this is pretty much a month after Trump's inauguration. And there was a lot of talk about these things, reciprocal tariffs, and tariff being his favorite word and things like that. So we don't want to go into all the ins and outs of the whole tariff debate. We've gone through the last number of videos. You will do reference our previous videos if you do want to have a look back over them. But we make our position sort of very, very clear around the tariffs. What are they? And what do they mean for financial markets? And it was our opinion, really, and our bias, and we were able to benefit from this through our trading, is to suggest that ultimately these were a really bad idea for the economy. And the whole incoherent argument of it all was really a problem that we needed to overcome. So when there was talk about these reciprocal tariffs coming in, the market started to sell off. We saw very significant breakouts to the downside. And then there was a bit of apprehension, I suppose, with some very key dates in mind, and we saw a lot of price action, and ultimately the overall bias has been very much to the downside. Now we're quite considerably off the highs, but this is the bit of price action we want to just have a look at. So there's a few gaps to the downside, a few little rallies, a little bit of a bounce. There's a lower high now from a technical perspective if you're looking at the S&P 500. But last week we had a bit of a positive start to the week. We then had a gap to the upside. We saw a little bit of erratic volatility, but ultimately kept grinding higher. Now that brings us into the price action, which you can see today, which is pretty indecisive. So that's just a look at kind of where we're at, and we're probably 8-9% off the highs currently. We were significantly lower. And I think we're 8% down roughly from where we were when Donald Trump came into power. So about 10% off the highs as things currently stand. So with this technical view in mind, because that was what we saw, we just want to reference the two sort of most important aspects within the context of some of these moves. And some of the moves were sort of repricing this potential news coming down the tracks. The first one was the 2nd of April, referred to as Liberation Day. Now, we don't want to get into the ups and downs and the differences between a trade balance and a tariff. There seems to be some incredible confusion around that particular sort of discussion, and they're different things. So anyway, what was settled on finally, because of a bit of a move in global bond markets and the dumping of US treasuries, was a bit of a U-turn, literally a week later, and it was a Liberation Day U-turn effectively. So apart from China, this rate is actually up at 145% now, and there's a lot of debate as to whether China and the US are currently in trade talks. The US say, yes, we are. Unfortunately, the Chinese government are saying, no, we're not. So we really don't know. And this is leading really to the incredible uncertainty that we're all experiencing in these markets. Everywhere else across the board, we've just got this broad, flat sort of 10% tariff that's just put down on a broad, instant basis. A bit of a shift. Okay, it's a positive shift. It's not quite as alarmist as the Liberation Day tariffs, because there was a bit of a lead-in time. So this April the 9th was the time at which these tariffs were going to be implemented, and within 24 hours of the implementation of these tariffs, we got a bit of a significant U-turn. This U-turn was probably driven by the market response, which wasn't really good in any way, shape, or form. So that's the context of sort of where we are from a tariff perspective. And the last time the US put in this global kind of broad-based tariff dynamic and brought it in instantly was in the 1930s, the Smoot-Hawley Act. You've probably heard of it somewhere in the news flow. And it's an important event because we obviously had the crash in 1929. The Great Depression was underway, and that policy seemed to make that depression significantly worse, along with the high unemployment and the worsening of living conditions overnight. Now, that depression lasted 3, 4, 5 years before the US economy started to turn a particular corner. And now we're not foreseeing anything even remotely similar to that, but certainly we are on the side of significant market weakness. Now, that presents a little bit of a problem, because when we look at these financial markets and you do some analysis around many of the Mag 7, we're talking about Nvidia, even Tesla is seeing a little bit of a bounce, Microsoft, Meta, Apple, Amazon, and whichever other market I happen to be forgetting right now. Microsoft, did I say? So all the Mag 7, they're all getting a little bit of a bounce off the lows, as we are seeing replicated in markets like the US indices. So, and it's no real surprise really to get a particular bounce. But when we ask ourselves, is now the time to buy? For us, the answer to that question is absolutely not. And the main fundamental reason for that, if we look at history over the last 80 years, America has become a massive superpower, global superpower, dominating culture, society, infiltrating every part of our lives in so many ways, through popular culture, through music, through film, you name it. So we're talking about American hegemony being the world's global superpower. You build in the political influence, the military influence, and the financial influence of the importance of institutions like the Fed, the Federal Reserve. All of a sudden, you've got the basis of a significant, influential, and incredibly important piece of the global economy. Now, in a relatively short period of time, Donald Trump is beginning to alienate that basic principle. And that is what we're anticipating is going to effectively lead to further weakness. Now, will we make new lows and will the wheels fall off? We really have to trade these markets as we go. However, just due to the basic principle, would we be willing to be buyers of these markets? Unfortunately not, because nothing has really changed from aspects of the weakness that we've already seen. So the question we've got to ask ourselves as traders is, has the whole tariff dynamic and the indecision from US administration and not just the indecision, but the incoherency of the whole topic, it leaves far more questions than answers. And as a result, do we believe that these markets have priced in all of that weakness? We don't think that these markets have done so. Plus, you've had this pull forward dynamic with all of these corporate earnings, and we may see a period of time where we get really good positive earnings for Q1. And a lot of that is with the deadline in mind, the 2nd of April deadlines. There was increased purchasing, increasing economic activity. As a result, the figures may look considerably better than perhaps what they could be and should be. Now, saying this in mind, we are more likely to get a much better reflection with Q2 and Q3 results over the course of this year. So this might take a little bit of time to develop and unfold, and I'm sure it's pretty much going to be narrative driven. So if there is, a panic or there's a negative narrative, maybe, Trump making a decision around his, imposing further tariffs after 90 days, if the connotation is somewhat negative for markets, then we'll see considerably quicker weakness. Now, he's also he has the potential to impact these markets positively as well. So if he turns around and he continues the U-turn and he starts to remove these tariffs in broad strokes, then you could argue, right, well, this could be the foundation for actually some US growth and potentially as a result, global growth. But as we're looking at these markets on the 28th of April, we are certainly looking at these markets from a bearish bias or a bearish perspective. So the question we want to ask ourselves is, what sort of technical opportunities do we have in these markets? And this was the initial breakout. This was the opportunity that we were more than willing to get into the downside, and we started to see a leg upon leg to the downside and some fantastic opportunities during this period. And this is the erratic little bounce we saw sort of 3 weeks ago, the sort of the relief rally, you could say, before it, attempting to make a new low. And now this is beginning to turn around and potentially look quite positive, which is the reason for the title of this particular video. However, we're support and resistance traders, so we want to identify important levels of support and resistance, and you can see these lows sitting in here. So this general area is where we are still looking for opportunities to start selling. And the only caveat to that is unless something significant changes. And we're going to be listening carefully to see if anything does change in this process. So what we're currently looking at these markets for opportunities to start selling, because this is the move that we'd be looking for. Let's just say, for argument's sake, we kind of rally a little bit higher. We'll be looking for sell trades. If we fail to make further progress, we're still looking for opportunities to sell. And this is your momentum trade. This is the trade that we'll be watching very, very carefully. We just have to, it's a game of patience, and we just have to wait for the right type of conditions to take advantage of the next significant move to the downside for these markets, which we currently believe is somewhat inevitable. So there's a few things to consider. Our bias would be quite bullish for markets like the S&P, the dollar itself. We would be certainly looking for very significant dollar weakness. You can already see the move in the pound dollar yen, which we're already in to the downside. We'd expect further downside there. There's the potential for the dollar to weaken against the Swiss franc, the Canadian dollar, although we've got elections currently in Canada, and then upside moves in markets like the Aussie and the New Zealand. So look, we've still got a little bit more to do. So we're not quite there yet from a dollar weakness perspective, but that's the trade we're effectively looking at. So that just about concludes this urgent market update video. And it really lies in Donald Trump's, which is unfortunately the whims of one individual. And that's what makes this market really, really uncertain as things currently stand. Okay, so with all this in mind, I'm sure you may have some questions. Feel free to email us at support@thelivetraderoom.com, and we will get back to you as soon as we possibly can on that. And on that note, we'll let you go. Thanks very much for joining us as always. We hope to see you for our next brief video. If you are interested in learning how to trade, you can just go to a website and get some more information there about all the different options that are available. So from everyone here, take care of yourselves. We'll speak to you soon. Bye for now.